Let's talk about Apple, stock symbol AAPL. This stock rallied big time today, but before the close, it had given up a large majority of those gains. Is that a warning sign for the stock? And how should we be responding to what we saw today? In this video, we're going to tackle all of that. We're going to go through the technical analysis and more. Let's go ahead and dive right into it now. From a long-term perspective, the stock has been in a pretty solid rising channel. It's been tested multiple times. It goes all the way back to the 2020 lows, and it's held each time. Even when you look at it from last week, it broke below it on an intraday basis, tested the 200 week moving average, but managed to hold it into the close. So it's still, this channel on a weekly basis is still intact. When we start diving down into it on the daily chart, what you'll start to notice is that, yes, there is a declining trend line that has formed off of the December highs. And now that same trend line has actually gotten even steeper as 2025 has unfolded. So now we've gone from a trend line that was like this to a much steeper trend line now. Also, we got pretty close to testing this trend line here today, but we didn't quite get there. But what I would also say to be watching is this AVWAP that is off of the February highs. This AVWAP got tested today, just like it got tested in late March and again here in early March, and as well where it started here in February. That's where it's anchored to, the February highs. But each time, in both instances in March and again here in April, it has seen some sharp price rejections. So this is a huge warning sign, I think, for Apple. Also, you have some resistance that was once support that kicked in today. So we gapped above it, but then it spent all day getting back below this huge resistance level on Apple. So this orange line here, that's resistance that it's struggling with. Also, a few more points that I want to keep rolling out here for you. This level here is kind of interesting. Now, you could say that it's not a respecter of this support level, but over time, it has been going back to 2023. It showed it as resistance here. It did break above it here, but then when it pulled back, it bounced right off of it as support, essentially making that a support level to watch going forward. And then here, what I find so interesting is that it never actually broke above it on an intraday basis or during regular trading hours. Instead, it gapped below it. And then when it wanted to get back above it like it did today, it gapped back above it. So I still think that it's worth watching from an intraday basis, because on an intraday basis, it has respected this as a support level. It's just managed to gap above it and below it during non-trading hours. So here we have the declining resistance. We have the AVWAP level. These are all key levels going forward that we need to pay close attention to. Support underneath could kick in during regular trading hours. Now, if everything starts to break down again, where is the key support level at? Let's say we break back down below this purple line, and even we get back down below this lower channel band. What's next? Well, this huge support level right here is going to be very, very key. This goes all the way back to 2023, where we tested it twice there, tested it again off of the April lows. It wasn't a completely clean test because we did dip below it back in April, but we quickly reclaimed it. And then we tested it again here in April, and it was a sharp bounce off of that level. So if we do come right back down again, and let's say we're back below this price level support and rising channel band here, we break below that, then it's this support level that we have to be paying close attention to. That's going to be around 168. And so if it breaks down below these levels, that's where it starts to get much murkier, because there's not a clean support level nearby that we can take refuge in. You're maybe talking about a move back down to this 130 level where it's held as support before in the past. But even that is not the cleanest of support levels. So it's either going to have to carve out a new support level somewhere here in between 168 and 130, or it's going to come all the way back down to this 130 level. But there's just not a lot of good support underneath if this 168 does in fact crack. And what I would also remind you of is the fact that today, yes, it finished 2.2% higher. It was up over 6% at the open. But what's the concern here is that this was pretty much the best news that Apple could have hoped for. It was getting relief on its smartphones that are made in China, that they're not going to be subjected to those tariffs. However, it didn't rally like that. It was a huge sell the news event. They rallied it up in the pre-market and then pulled the rug on the retail that jumped in after the open. And so now we're seeing a situation to where, okay, what's really going to improve the earnings for Apple at this point? And now with earnings right around the corner, I would be shocked if they didn't show some pessimism or a potential forecast of a recession that's going to hit the stock going forward. So I am pessimistic on Apple. I don't think that this was a very good sign for it today, that it wasn't able to sustain the majority of those gains. And with earnings right around the corner, this is a hard one to get behind. I would rather buy it at a much lower price going forward. If you enjoyed this video, make sure to like and subscribe. And let me know down in the comments below, what is your take on Apple right now? Because I really do think it's a really concerning chart. I think there's a lot of resistance here that's working against it. Let me know what your thoughts are. Do you think that this is still a good time at $202 a share to be buying it? Or do you think it's going to come back down to the 160s or even less? I would love to hear from you guys in the comments. Thank you, and God bless.